Hello everyone, it's Susie, Crypto Granny here. The date is the 29th of the 9th, 2021, and the time in Amsterdam time is 17:12 p.m. Now, it's very close to the end of the month, the end of the quarter, and we do find in all financial markets, fiat markets and cryptocurrency markets, there can be a lot of argy-bargy simply because it is the end of the month and the end of the quarter. And often we get window dressing, where the fund managers try and drive different products or different shares or different bond markets or crypto down or up, depending on how they're positioned. So we do tend to get more volatility in fiat markets and crypto markets, depending on the big whale positioning in terms of, in terms of derivatives, options, futures, and this sort of thing, and physical positions, because they're revalued at the end of the quarter for the month as well. And it also depends on their distributions for their funds and what they have to pay out in terms of returns to the clients that invest in those funds and everything. So often on the last day of the month, most traders or professional investors or traders won't do a lot that month, that day, simply because volatility is raised and anything can happen on those days because of the big whales in the market. Now, look, what I'd like to start with first is backwards. Rather than talking about crypto news first, I'd like to talk about the fiat markets first, because all the risk is coming from that market at the moment into the cryptocurrency market. And because of that, the cryptocurrency market, for all the risk metrics, is still extremely elevated on a fundamental basis, but also on a technical basis, okay? And that's why myself and my Patreon clients, we're not buying anything at the moment, because I'm expecting a bigger move down. Also, if you look at whale bots alerts, which I look at as well, there is just so much money and also so much crypto being transferred between wallets on and off the exchange, and a lot more coming to the exchange as well. And that's always an indicator that if people, that are whales that are transferring from their wallets to the exchange, in crypto, for example, or PAX or something else, we could get more downside selling as well. Now, we do know the whales over the month of September have been buying the weakness in Bitcoin and Ethereum as well. So this could drive markets down as well. Also, if you look at Bitcoin's trading on a 24-hour clock, the lows are getting lower, which is not a great story either. So there's a lot of reasons to stay out of this market at the moment. Plus, funding negative rates are actually getting higher, which means it's costing people more to borrow the stock, to sell, and volatility levels are at extremes as well and not coming down. So let's just start with the US government. What are some of the event risks this week? We'll talk about Evergreen. We'll talk about interest rates, particularly corporate spreads, high yield spreads, emerging market spreads, and the equity market. And then we'll talk about the Bitcoin cryptocurrency market, but also COVID. The COVID figures are rising as well, astronomically as well. So there are a key number of risks this week, clearly, for the US government in Congress particularly. There's three pieces of legislation that they're trying to get through the Senate. One is a $1.5 trillion infrastructure bill. And don't forget, that includes this terminology or language of crypto brokers. And obviously the crypto market wants that terminology defined properly, because the way it sits under this bill, it could be anyone that's a crypto broker, including the miners and the validators. And this is just absolutely ridiculous. Miners and validators are not brokers, okay? And obviously there's been a lot of communication from the crypto market to the powers that be to change that definition in the bill, and it still hasn't been changed. I mean, this is what you find in governments and the SEC. They're not listening to the market. And often because they don't listen to the market, they completely stuff up the liquidity in the market and everything else that we've seen, particularly in fiat markets over the last 30 years, which I've certainly seen. The second thing that they've got to come up with is this $3.5 trillion spending dollar bill, which is to increase social welfare benefits and social welfare projects, and also climate change initiatives. And the third one, which is a huge risk event, is to raise their debt ceiling, okay, for the US credit limit. They keep borrowing and borrowing and borrowing. The debt ceiling, I think, it's been raised about 78 times, right, in a span of something like about 20 years. The debt ceiling just keeps getting higher and higher in the US, never to be paid off again, seriously. And also, it was supposed to be on the 30th of September, but they've extended that debt ceiling to the 18th of the 10th. Now, the thing is, even though the Democrats control the Senate, there is heaps of division amongst the Democrats and the Republicans to how much they can increase this debt ceiling by. Now, if they don't increase it, it's going to be very problematic for markets, okay? Absolutely. Because it effectively means the US administration and their payment to, obviously anyone that's a part of the US government, they literally employ something like about 22 million people in the government, okay, which is a lot. It means these people don't get paid at all. Now, that could be obviously very bad for equity markets, and we do see historically equity markets in the month of October are seasonally very volatile. We've had 2 large stock market crashes in October. Let me take you back over economic history, and that's why I look at economic history. I absolutely love it. Obviously, Black Tuesday, 1929, and that was a huge market collapse in equity markets due to high leverage and all sorts of things, and it created the Depression of 1930 to 1933, and then subsequently into war in the late 30s. Also, September, the 17th of October, 1987, I was actually in markets at this time. I remember that day like it was yesterday, and there was a big stock market crash there, and rates went up to 17%. And you could not get funding for the love of anything. People were going broke. Banks, cut limits and everything. And this was diabolical on the September 17th of October, 1987. Now, when you look at that on the charts now, it looks like a small blip. But I can assure you at the time, it was absolutely humongous. And then, obviously, we all went into recession in 1990s, the early 1990s. And young people couldn't get jobs or anything. So, a stock market crash causes absolute havoc, and it reduces growth, okay? GDP, gross domestic product. It stops people from investing. It stops people from investing in industry where it creates jobs. So it is absolutely problematic, and it stops the banks from lending out, okay? They cut all their funding limits. And that, again, that's what we saw just in 2007, late 2007, into 2008 and 2009. Also, I hasten to add, in 2008, a lot of people started buying stocks in 2008. And again, I remember this extremely well. It was absolutely shocking. And then there was a big sell-off in 2009. And many traders and investors and wealth managers lost their jobs, lost their properties, got into the market, they were margined, and they just absolutely got hammered. They lost their houses and everything. And I know a lot of investment managers and traders that actually suicided, which is a horrible thing. But the markets were so bad. It was just terrible, really, honestly terrible. Now, at the moment, we have credit spreads blowing out to smithereens. Emerging market debt spreads are really underperforming. High yield is underperforming. High grade is underperforming. And international credit, which are bonds, are also underperforming. And don't forget, all these have come off a very low base, okay? Just like interest rates. Interest rates have come off an extremely low base because we know the Fed has been manipulating interest rates for years. And this is going to be, honestly, when these interest rates start rising, and they are, it's going to revalue all markets, okay? Because interest rates, whether it's government debt or whatever, is seen as safe haven, depending on which government it is. And it basically, literally everyone goes to safe haven cash and safe haven short-dated bonds, okay? And the thing is, all the interest rate curves in the world have been manipulated. In some instances, they're still negative, right? Where you pay the bank, deposit your own money, and you have to pay them a custody fee. So the unwrapping of this curve, this interest rate curve, where it becomes a positive curve, could move very, very quickly. And if you look at the US 10-year bond rate at the moment, it's at 1.518 and going a lot higher in yield, okay? This thing could get to 2.5% very, very quickly or even higher, right? And that's the risk of these markets at the moment, seriously. Now, the equity markets were off a lot last night, the US equity market. I've told you guys out there, the US equity market is so vulnerable, and it's been vulnerable for some time. The big investment banks in the US agree with that. Morgan Stanley said underweight US equities. They've been so expensive on every measure you can imagine for so long. It is a joke, right? And it's because interest rates have been so low and in some cases negative, right? So what we saw last night is the Dow came off 1.6%, the S&P off 2%. These are big moves, people, okay? The NASDAQ off nearly 3%. The VIX, the volatility measure, is extended. It's up 20% and will go higher, okay? With extreme volatility, the VIX moves higher, and that's very, very understandable. And with that, the cryptocurrency market will be affected. There is no doubt about that, okay? They're both risk markets, right? And risk markets flow into other risk markets, and there's a huge contagion effect. All markets are related by sentiment and positioning. And if the equity fund managers are still long equity markets, the equity market could go down a long way. And I suspect they are, just by what they've been buying over the years, okay? If you look at the put options, they've barely got enough put options to cover their positions, and they're all long and wrong, okay? You can't be long equities when every other risk metric is selling off to smithereens, okay? Also, this Evergreen thing, the Chinese property development company, you know, to refresh your minds, it's the second largest property development company in China, has something like 1,380 projects all around the country in about 300 different cities in China. They sold 10 billion shares, to Shenzhen Bank, and this will be used to pay off their developers' debt owed to different companies, but it'll be specifically to Chinese companies, which is what the Chinese government's told them to do. So they sold 1.75 billion of shares, and today they have an interest payment on coupon for bonds that overseas investors have bought, unfortunately, which are now worth only 25 cents in the dollar. And that coupon payment is 45.2 million. And don't forget, last week they had to pay a coupon payment to overseas investors of 83.5 million, and that didn't get paid, okay? So this is not great at all, I have to say. Also, Evergreen have some very large coupon payments in December and in January, right? So, they will go bust. I have no doubt about that, and I just don't think the Chinese government will come in and help them. Seriously, that's my view on this. So let's get on to the cryptocurrency market, everyone. Let's look at live coin watch. Today, market cap is 1.919 trillion. Volume is 64.137. Still high, but not as high as we've seen it in times when the market is buying. Liquidity is at 4.712 bill. It's reasonable, but in the times of bull markets, we see that liquidity up at about 5.8 bill to about 6 bill. Bitcoin dominance is at 41.43%, very static. But as you know, in sell-offs, Bitcoin dominance goes higher because the altcoins underperform, okay? Now, I do believe, as I've said before, Ethereum is more vulnerable to downside than Bitcoin, and there's a lot of reasons for that, okay? If you look what's been happening in China, China have stopped all the miners in China, right? Excuse me. Now, there was 5 large miners in China that were mining Ethereum, okay? Proof of work Ethereum. And 2 of them have actually been stopped, and the other 3 will be stopped as well. We know that the big one was shut down yesterday, Sparkpool. That was shutting down. It's got to shut down on the 30th of the 9th. And the second one, another shutdown, is Beatpool, and they've got to shut down on the 15th of October. Now, this is a huge problem for Ethereum, I've got to tell you that, because both of these are responsible for 25% of Ethereum's mining, right? And what this means is Ethereum is going to be slower and slower, right? and it is hugely problematic for any projects that are on the Ethereum platforms, right? The slower Ethereum becomes, the worse it becomes, right? And this China thing is going to affect Ethereum more than anything. Now, Bitcoin doesn't have a lot of projects on it, has none to my ideology, my understanding. Ethereum has all these projects on it, and any project that's on it, if Ethereum doesn't work, those projects don't work at all, right? It means you can't, do anything with their tokens or anything. And I think this is the risk we run. And as I said, JP Morgan came out with a valuation of Ethereum of $1,500 per unit. It's currently at 2,924. I am not bullish Ethereum at all. And when you look at the positioning of whales and fund managers, they are all long Ethereum, and they're long and wrong over BTC, okay? And that is something everyone's got to look out for. Also, coupled with that, Bitcoin, China stopped Bitmain from allowing, they're not allowed to sell mining hardware anywhere in China. They've also confiscated thousands of mining machines all over China. And they've, as you know, they've stopped Alibaba from selling any mining equipment at all. And it just goes on and on and on. China wants to stamp out anyone trading cryptocurrency and anyone mining cryptocurrency. And there's a good reason for that. It's political, right? Clearly, they cannot control their civilians if, civilians do this, right? It's very, very political. And that, given Chinese politics, we can all understand why, okay? So also what we've seen in the market is huge amounts of Bitcoin being moved, something like 10 billion of Bitcoin's been moved around the market from different wallets. We also saw it with Huobi Mining Pool, which was also established in China. That thing's got to move out of there as well. And any of the Asian exchanges that operate in China have to close down, and they have to close down their accounts, okay? So obviously the Asian exchanges like Huobi and OKEx have actually underperformed in price simply because of this whole Chinese thing. Now, when we look at our on-chain data, we do find the whale ratio index is exceeding 0.5, and that generally tells us that, the whales are starting to sell, right? Now, the whales, as you know, did get longer, and the thing is, if Bitcoin fails support on the daily of 39,400, and it's getting closer, there's going to be heaps of sells, okay? There's going to be, people have stops in probably lower, and all those stops on Bitcoin are going to be set off, okay? If you look at the 24-hour clock for Bitcoin, the low today, 24 hours, was 40809. Yesterday, the low on Bitcoin was 41553. So the lows are getting lower, people, and this doesn't make me want to buy this, okay? Just on that alone. Technically, the lows are getting lower, and you do not buy a market technically when the lows are getting lower, okay? Now, 39,400 is huge, and if that continues, you're going to see this thing potentially go down to 28,323, okay? And, we just wait, because waiting is the right thing to do. It is an investment decision, and we wait. Also, we've seen massive amounts of Ethereum being moved from different wallets to exchanges as well. And I suspect, we're going to see a flush out in this market, okay? A sell down. There's no way that I don't believe that's not going to happen, okay? That's for sure. So it's just going to be interesting to see what happens. But look, watch these markets. Watch the US 10-year bond rate. At the moment, it's 1.518 and moving higher, and that will certainly dictate where the risk markets go, okay? If we go to Mazzari and look at the totals on Mazzari, for total volume, real volume, according to Mazzari, the volumes are getting lower. Tether, 15.75 billion. Bitcoin, 4.54. Ethereum, 4.23. Binance US, 3 billion. Solana, 1.49. If we go to XRP, it's 782 mil, okay? Now, let's go over to some of the news. Nigeria is doing a CBDC with their digital Naira, and they expect that to come out in October sometime. Also, one of the world's largest point-of-sale providers has partnered with BitPay to allow US-based merchants to accept cryptocurrency payments. This is Verifone, and they've enabled cryptocurrency payments to major retailers through BitPay, okay, which is good, which is very good for them. And also, Binance, apparently Earther, it's a new P2E game, has gone on Binance's smart chain, and obviously Binance are increasing their NFT metaverse. KuCoin is giving away $1 million in prizes, so you might want to check that out. Deloitte's chartered accounting firm, which is a management consulting firm, one of the biggest in the world, actually. They have something like 330,000 people employed and hundreds of offices globally. And the credit unions in the US have asked for regulatory clarity with cryptocurrency. It doesn't surprise me, right? And I'm actually surprised that not a lot of other institutions and corporates and everyone else that invests in crypto is not shouting at regulatory clarity, just like, you know, Brad Carlinghouse, the CEO from XRP, okay? Now, in the US, there's over 6,000 credit unions which are regulated, and this is a real problem, right? If people don't know the regulation for crypto, how can the chairman of the SEC, Gary Gensler, say it's clear? Because it's not clear, people. As you know, it's about as clear as mud. Now, Chainlink always seems to be putting on 2 new clients a day. There was a large parcel of Chainlink being bought the other day, 1.4 billion, I think it was. And these new clients are PolyEnt X, which integrates with Chainlink's variable random function in NFT metaverse called the game Ape-In, and ARM, which uses Chainlink price feeds to calculate token and portfolio values. Also, VeChain Thor, the Centre of Testing International Group, verifies VeChain Thor the most eco-friendly public blockchain. And VeChain do not use proof of work, okay, which uses all the electricity, of a small country in the world for a year, right? It's POW, proof of work, is not eco-friendly. VeChain uses proof of stake, and it's even looking at updating the technology to something even better. Now, Facebook announced $50 million investment fund tasked with developing its vertical metaverse. Polygon users yesterday, there were more users using Polygon yesterday than Ethereum, okay? 351,000 active users for Polygon Matic versus 326,000 daily activity users for Ethereum. Now, Guardian Link announced its technology partnership with Polygon to accelerate technology stability, security, custom templates, and smart contract managements to publish, mint, review, and manage NFTs. That sounds like a great partnership, that one. Also, FTX, the exchange, signs a deal with NFL player Aaron Jones. Now, Crypto.com, Crow, the exchange, has become a node operator on Orion platform and its protocol. And obviously they want to do this to increase their empire, increase their source of revenue, increase their growth for more projects, okay? Orion Network has over 10 million users, 100 cryptos or more, and they have terminal, crypto cards, exchange, and wallets, right? So that's a great story for Crow, Crypto.com Crow. Ripple also have teamed up with MasterCard and Ripple's partner Lulu, which is an exchange in the UAE, to enhance remittance. Lulu and the National Bank of Egypt, don't forget, became RippleNet's clients in May 2021. Ripple also launched a $250 million fund, a creators fund, to encourage NFTs. So they're looking for developers to come on to their platform, which is awesome. Now, also Ripple sent a letter to Senator Toomey seeking SEC clarity, okay, on the regulation on his XRP and how to do things better, okay? So, that's what the market is screaming for. Now, if we look at the social media, www, they're looking at DYDX, Coddy, Plant versus Undead, Smooth Love Potion, Bernards and Axie Infinity. If we look at a Luna Lush, they're looking at Axie, Bernards, Coddy, Zequilla, XLM, Solano, Dex Tools, XRP, and Barn Bridge. If we look at the Greed Fear Index for the cryptocurrency market, it's currently at extreme fear at 24. Yesterday it was 25, last week it was 21, and last month it was 73. And that thing updates every 9 hours, so check that out. We also know the whales are starting to sell because their index is above 0.5, and I have seen from whale trading bots that a lot of crypto has been sent to the exchanges, okay? So something's going to come soon, I think. That's what I believe in. If we look at the CME curve, the futures curve for Bitcoin, it was only up slightly, 1%. It's still in contango, but not much, okay? If we look at the calls, they've had 73.5 million overweight in calls. If we look at Ethereum, they have 206 million overweight. I'm very sorry cutting that off, but if you'd like to hear the whole podcast and get all my information on Patreon and reviews and all sorts of things, please join my Patreon. It's Crypto Granny on Patreon. You can see what's available there, and it would be very, very much appreciated. Thank you.